The CPI is coming out tomorrow morning. We need to be ready for it. What exactly are the market impacts? I'm going to talk about it. I am Dr. Stock, Doctor of Education, and I saw a baby sheep driving the other day. It was riding in a Lamborghini. We have the CPI coming out tomorrow at 8:30 a.m. and there are quite a few reasons why it's big. The biggest thing is the Fed and those darn rate hikes. And I want to show you some technical analysis on the Qs and the SPY that I think make it very interesting for what exactly the market's going to do next. Also in this video, I will be showing you about how to get 16 free stocks from Moo and about my Patreon and the options course that I have being created over there. So in the meantime, we have CPI coming up. I'll show you the expectations, the consensus that's out there, what I believe is going to happen with it, and then also what Trading and Economics has, and also the Cleveland Nowcast. So we'll start off by popping that up there for you. There we go. And let me get over to my spreadsheet. So here we are looking at August. This is CPI for all items, and the star showing you that we're looking at estimated value here. Trading Economics has them coming in at 0.5% month over month, and I do too. Consensus is 0.6%, and then Fed Nowcasting has 0.79% month over month, which is a little bit funny because they say 3.8% on a year over year basis, whereas I have 3.7. The consensus is 3.6 and Trading Economics forecast is 3.5. And you can thank seasonal adjustment for the difference between these values that we have here and what you see with those year over year values. And I really do feel like there's not necessarily agreement across all the different forecasts that we get out there. I can tell you that I do have agreement between what I have in the seasonally adjusted value and what we have for this non-seasonally adjusted value that leads to the year over year measure. So when we go over to core and look at that one, you can see we actually have a consensus over the 4.4% for the most part, although I think consensus for this might be 4.3. And we'll look at Trading Economics to make sure that we have the most up-to-date information on that. I think 0.26% month over month, and I think that will be that would round up to 0.3, but I think it's also that we get that 0.2. So we're going to watch for that to happen. Fed Nowcast comes in hotter than that, something that round up to 0.4. And what in the world would that mean for markets? We'll take a look. And then Trading Economics forecast for the core measures, it comes in at 0.2. So I'm in between those two of them. So let's bring down the spreadsheets and then we'll bring back Trading Economics. All right, so looking at Trading Economics, there you can see the consensus that they have down this column, and then over here is the Trading Economics forecast, and then in green here, these are last month's measures that we have. 0.2 to 0.3, I don't think is going to be detrimental for us. So I think that on a core basis, we'll be fine. Food and energy to blame for what we have for these higher values that we see here for August versus what we had back in July coming in at 0.2. And then year over year, August was dipped down below July, so we're going from a lower base in this case, and so that adds to the little bit of fuel to the fire. I think we would have been at 3.3% just from July's measure versus August measure last year, and then tack on top of that the fact that we have a little bit more inflation to show from food and energy most likely, and so that's why you have these higher numbers. So they are expected. So if we get a higher print than we had last month, that is something that's already baked into the markets right now. We don't really want to go higher than these values. And then when we look on a core basis, and I'll pull up a chart on that for you, we can see that we are at 4.7, and for core, what's expected is still below that. So core would still be dropping, and I think that's one of the most important things to pay attention to. Now, when we go over to CPI over here, this is looking on a month-over-month basis, and you can see the downtrend that we've had. Even across the bottoms, we've been trending lower recently, and for me, I have us right in between here. Now, 0.4, which is what Fed Nowcasting has, should we come in at 0.4, that actually puts us back up at the top of this range. I don't think that the markets would like that very much. I think we're looking for 0.2 and possibly 0.3. 0.3 might not necessarily be great, but I don't think that would be rattling because of what we have in here across these bottoms. We'd still be sort of resisting, if you will, about where that would happen, and then that would also be not as high of a spike. Plus, if you look over the history leading up to the times prior to the pandemic, we've had times where we've rounded up to 0.3 in the past. I don't think there'd be all that earth-shattering from there, and it is possible that we do fall down below that. Let's look at it for a year ago basis. So you can see what that looks like, and you can see that we've hit that downtrend, but we're still significantly up from where we were at before. So that's worthwhile to pay attention to. Now this one, when we look at it for July, there's the 4.7 that we had. And if we go back here to see what exactly, there's 4.4. So that would still be lower. So that was from June of 2021. If we come in below that, it's possible that we hear something that would be a lower inflation measure on a core basis than what we had back in June of 2021. It'd be even better if we dropped down below 4%, although I don't think that we're going to get that. So maybe it would back us down to something below October or below September. Maybe they would shout back to saying below June, where we're at in June of 2021. We're going to have to wait and see what exactly they say about that. I think 4.4 is what we come in at. That would put us in an even, and we still want to see that come down even further. So what we don't want is to come back to 4.7% that we would have here, and because that would break that trend that we have going on right now. So for the CME Fed Watch tool, here's the big thing. This is the sticking point and why it matters so much, and I'll show you in the markets that the markets are sort of holding their breath on this one. For September, right now, pretty much certain that we have a pause, and then when we go out, it doesn't matter if we go out to November, it's still most likely that we are right where we're at right now. And we go to December. December will show us pretty much the same thing, that we are still most likely scenario right where we're at right now, although there's no small chance that we have a rate hike happening after that. And like I said, I think a lot of this is something that would be playing those possibilities that we could see that resurgent inflation, although I don't think that we will. I'm still of the mind that we pause exactly where we're at. And we got to January, we can see there's now a 7% chance that we are back down to a quarter basis point cut by then. So a small chance that we get there by January. And I've said on this channel several times that I do believe that by December, January, that it's possible that we start to see that first rate cut come in. And that would mean that something aggressive happened between now and then. And it's a possibility. And I'm going for the early call on that. I know other people are saying March or out to even June before we see that happening in 2024. So the next interesting thing here to look at is what exactly the markets are doing as a result of this. So let me bring up Moomoo. There we go. And what we're looking at here is QQQ. So tracking the NASDAQ 100. And you can see this symmetric triangle pattern that we have with a slight bullish bias to it. And I don't know that we hold on to that. Now, mind you, this shape would imply that we would break up through the top, but we're really going to have to see. The momentum is still sort of kind of near that border of between bullish and bearish territory. And I said yesterday over in the Discord to one of my Patreon members that we would possibly close today around that 50-day, and it looks as though that's where we're closing with only 15 minutes left to go in the market. When we go over to the SPY, we get a very similar look, and this is the market really narrowing down to that point of focus that I think that we're going to break in one direction sooner or later. And the nice thing is about going in a defined direction is that then you have certainty, and then that's much easier to trade on or to invest on. So if we break down and we start to head off and then we can revisit some of these lows, that first area that we might stop at is 442. And then after that, we could stop down at 437. And then from there, below around 433 down to 430 possibly. If we go up through the top of this thing, we could stop at probably about 452, and then after that we could go up to about 457, and then after that it's really about looking to see where we're at before, which is all the way over here, 460. Possibly we can go up to that 468, and I think whatever move we get is going to tell us what direction the market's going to go for a little while. And I think it starts tomorrow, even if it does carry on through what we see, not only for the CPI and the PPI. So I think that we're going to come in probably around where those expected values are. And well, I did my own work on that, my own research, and that's pretty much where I have it too. So if we get surprised to the downside on inflation, that was cooler than we expected, then we pop up through the top of this thing and probably experience a little bit of exuberance. If it's something that comes in hotter than expected, then that's something I think drops us down through this thing a little bit more aggressively as well, especially if we do get that next rate hike coming in. And maybe we start using that 50-day as resistance, which actually here on the SPY, we open below it, and it looks like we're also closing below. We still are still near the bottom of it, and we still are respecting the bottom of this line that we have right here. So I think a breakout is coming for us, and I think that the inflation reports are some of those things that are big catalysts to tell us which direction we're going with that. All right, I told you I'd tell you about those free stocks. So with that link down in the description, find that link for Moomoo. And by signing up and making your deposit, you get 5 free stocks for a $100 deposit. $1,000 or $5,000 deposit gets you 15 free stocks. $5,000 deposit gets you that free share of Tesla or Google. And why not take advantage of that? You're getting access to a wonderful trading app, and they also have added the options, the advanced strategies for the options. And I'll tell you, I've used it several times now. It's absolutely wonderful. And they even have an option analysis tool that tells you about your probability of profit or loss. And it also tells you where your break-even points are, your max profit, your max loss. And it's just very clean, easy to use, wonderful. And then so along the lines of providing more value, there's my Patreon. You can find that link down in the description where you can see my buys and sells, what I'm doing with my options plays, what I'm doing with my trades within the market. And then also, even better than that, is in that you can also get access to my options courses that I'm putting together over there to amplify your portfolio. I have 7 videos up now, and I'm going to add more throughout this week. And I'm going to go all the way from the very beginner, somebody who's never done anything with options before, and take it all the way up through advanced option strategies so that you can take advantage of all the opportunities that you find in the market and get as much alpha out of that as possible. So thank you guys for watching this video, and we'll see what happens with the CPI tomorrow. Remember about your free stocks using that link down in the description, and also check out the Patreon. Come over and join the community. Absolutely wonderful and kind members over there, all very ambitious and eager not only to learn, but also to look for opportunities and share them with each other. And you get to talk with me throughout the day over in the private Discord as well. Thanks again, guys, for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.